All right, I want to give a big shout out to my night owls rocking with me studying on a Saturday night. With that being said, I'm going to be recapping the trades that were made on Friday. And as a gift, I'm also going to share with you the top stocks that I'm planning to trade. I'm going to show you how to trade the best setups at the best prices heading into this week. So make sure you stay till the end of this video. Friday was the biggest sell-off within the stock market that we've had this entire year so far. As you know, if you watched my previous video, we were expecting the market to crash and we were focused on buying puts using the gap close reversal strategy. With that being said, Friday was a life-changing day for traders who chose to use the gap close reversal strategy and play for the gaps to fill below. We had some members take a decent position size and they were extremely patient with their put options, following the plans within the watch list, following the unique gap trading strategy that I've created. And one of the members turned his small account. He made over a $53,000 profit on his small account. Big shout out to Lee. He made a 350% return in one single day on his portfolio. And what I'm going to do within this video is I'm going to teach this strategy to you. This is a life-changing strategy. It's changed my life. It's changed members' lives within Trader Society. And I'm going to break it down for you and I'm going to share it to you. Obviously, to be successful as a trader, you need more than technical analysis. You need more than price action. You need more than a strategy. You need, risk management, position sizing, and psychology. Within this video, I'm going to break down the trading strategy, the price action analysis. I'm going to break down the charts and I'm going to show it to you. This is a trend reversal strategy that gets you in at the best price. And I'm going to show you how to identify key levels where you can use it with big moves, where you can make very lucrative trading returns in just the first hour of trading at market open. So I'm going to break down the strategy. I'm going to share it with you and make sure you stay to the end of this video because I'm going to share with you the top stock that I'm watching into next week and how I'm planning to crush the market next week by buying put options on this stock. And tomorrow, I'm going to be uploading another video sharing with you more setups, more stocks on my radar, and also going over the stock market updated price action analysis. Make sure you are subscribed to the channel and smash that like button. Let's get right into it. So first off, I want to give a big shout out to some members within Trader Society. Lee, if you've been watching my videos, he's been absolutely crushing it. Lee had a huge day, his greatest day year to date. He ended up making a $53,000 profit on his account, which is a 340% return. He said, "Thanks, William Cameron. You changed my life. Thank you." Big shout out to him, man. You changed your life. You took the education and you put it into action. And that is something that not everyone is willing to do. Not everyone is willing to invest their time into their education, and not everyone is willing to take the actions needed when they have the knowledge, right? So big shout out to you, man. Congratulations for doing that. Jay Bald had a huge day, ended up making a $7,200 profit, which is almost 20 times the cost of Trader Society. This is crazy. I mean, Lee in one single day made over 120 times the cost of Trader Society, which is a one-time fee, lifetime membership. Within time, we will be raising the prices. But like I said, at this time, it is going to be a one-time fee, lifetime access. So big shout out to Keith. He ended up making a 28% return on his account. Big shout out to Andy, absolutely crushing it. 53% profit, $1,600 profit. It's just insane, man. The profit's like $4,000 profit, 10 times the cost of Trader Society. Future had a big day on a small account, 280% return, $500 on SPY puts. Absolutely crushed with the puts. Big shout out to Greg, extremely consistent, very helpful and valuable within the chat room. He had another killer day, just like Lee's been crushing it consistently. Greg is as well. We got the same members every single week coming back, crushing it, $6,000 profit. So you guys absolutely crushed it. And within this video, I'm going to be breaking down the strategy, and see Lee posted his trades as well. Check this out. He started off the morning. This is the guy who made a $53,000 profit, 350% return. He started off the morning putting in $4,800 into Tesla calls, and he flipped that to $44,000. And then he bought the Tesla puts using the gap fill strategy. He put in $6,000. So see how even though he made like a 10x return on calls, he decided to take a very similar position size. See how he's not scaling up crazy with his position size? but his account is scaling like crazy. So that's a key note. So nice job on the position sizing, right? Because when most people make a big win, they scale up like crazy with the position size. So very nice sizing on that, and ended up buying Tesla puts, put $6,000 in, and he flipped those to $26,000, traded Tesla both ways. So absolutely amazing job, Ben. So now let's get into this strategy. So in terms of this strategy, it is going to be a gap close reversal to fill the gap below. So I'm going to show you. Yesterday on Friday at 9:50 a.m., I alerted Visa V put options, same day expiration. I bought these puts at 160. This was at 9:50 a.m. And then I decided to add heavy to these put options at 10:02 a.m. And then in terms of selling, I did a very good job of maximizing my wins. I sold half at 10:27 a.m. Just like 40 minutes later, I sold half for an 80% win. And then I sold the rest at 11:42 a.m. for a 120% win. Normally, if you've been studying what I've recently been doing, and this is because my sleep schedule has been off and I haven't been as good, fatigued and sick and stuff like that. Normally, I would just get in, get out, make a quick 30, 40%. Now I'm with V making 80 to 120%. So I had the awareness, I maximized the position, I did a good job on that. Crazy thing is, if I were to hold all the way till the end of the day, those puts that I was selling at like $3.50, they hit $7 to $8. So I did leave a lot on the table, but huge improvements. And I'm going to be breaking this down. So let's get into the strategy. It's called a gap close reversal to fill the gap below. Now, what does that mean? So what you want to do is you want to find a stock that gaps up, right? Excuse me. And you want that stock to be trading at a key resistance level on the daily chart. So let's take a look at V. You could see right here, it had a gap up. This is a massive gap up. It normally doesn't gap up this high. It went from 200 all the way to a high of $222. And if we look at the daily chart, you can visually see, is this at a key resistance level with big short-term or midterm or longer term, depending on, if you want to do a swing trade or like a leap option trade, you just want to ask yourself, does this have big downside potential, ideally for the short term? And if you study V, you can visually see right here, it got to a high of 236, big downside potential. It quickly sold off to 206. You could see right here, it got to a high of 227. It quickly sold off to 206. You could see right here, it got to a high of 230. It quickly sold off into the 180s for new 52-week lows. You can see right here, major resistance at 229. Quickly sold off all the way down to 200. So the answer is yes. This is a stock that gaps up, and when it hits this key resistance level, what's that key resistance level going to be? If you look at the daily, that key resistance is towards the upper 220s to 230s. So the point is, it had a massive gap up and it's trading at major key resistance level, right? So it qualifies. Now here's some other tips, and here's some other things that you want to do. You want to identify gaps that are waiting to fill above, that are towards or at that key resistance level. So let me show you some examples. Right here, V. This is major resistance, as I showed you, with big downside potential. There's a gap to fill above at $231.82. This blue line right here, there's a gap to fill above. Once V gaps up and it runs and it fills this gap, you can see very little upside potential, big downside potential. What do we call that? We call that a gap close reversal. The stock goes up, the stock gaps up, it fills the gap, it has a reversal, and it comes back down to fill the gaps that's waiting to fill below. See how there's a gap at 206.15, right? So that's the strategy. That's what we want to do. We want to find stocks that are gapping up, that hit key major resistance levels, that are known for, filling those gaps, having those gap close reversals, topping out at that key major resistance level, and that like to have reversals and come back down quickly to fill the gap below. So it's a two-part strategy. Gap close reversal, the stock closes the gap, it has a reversal, then it comes back down to fill the gap below. Excuse me. So with that being said, I'm going to show you how to use this now. I'm going to show you how to actually trade this. You can visually see right here. Check this out. It works. There was a gap to fill right here at 228. It fills the gap. It has a reversal. It forms the bearish candlestick on the daily, and then it sells off. Great swing trade opportunity. Gap, close, reversal, bearish candlestick on the daily, and then you swing trade that when it closes the gap, forms the bearish candlestick on the daily. You swing trade that, gap, close, reversal. It comes back down to fill this gap that's waiting to fill below. You see that? So it's consistently working. The chart is showing you that the strategy is consistently working. Look at it. There was actually a small little gap to fill right here as well, and it ended up filling that gap right here, and it had a reversal, and it came back down to fill the gap below, right? So it's consistently working. This is the chart you want to play. And you can see right here, there was a gap to fill at 226.09. It got to a high of 225. It almost filled it. Had a reversal, came back down to fill this gap below. So in terms of why did I buy puts, let's get into the breakdown. Let's get into the strategy. I noticed that the stock was consistently having gap close reversals in the 220s to 230s. I noticed it was major resistance. I noticed that V had an overreaction. It had a big upside move, a massive gap up, and it was due for a pullback. It was due for a gap close reversal to then fill this gap that's waiting to fill below at 201, right? I also noticed right here, V had a gap up. It got to a high of $224, which is some resistance right here. And there's a gap to fill right here, so not too much upside potential. And then it came right back down to fill this gap below, right? And I'm looking at this candle right here. I'm like, wow, history repeated itself. And then I'm looking right here saying, okay, V just partially filled this gap. There was a gap to fill at 226. It partially filled it on this day. It got to a high of 225, right? And I'm looking at the chart history and I'm saying, okay, this stock gapped up recently. If you go back to April 21st, it gapped up, it got to a high of 224. And on the same day, it dropped to 216s. It dropped to 215s. It dropped over 9 points in one single day. It filled the gap below and it went even lower in one single day. That's big downside potential. And if you can get that trade on a Friday with a same day expiration and you buy puts towards the top when the contracts are at the lows, you can make a crazy percentage return. You can make a 5x, you can make a 10x. It's out there. It's possible. So you can see right here, V had a gap up and it got to a high of 221 and it started to sell off. Why didn't I buy puts on this day? The reason why I didn't buy puts on Wednesday and I waited till Friday was because V stock, it just gapped up. That's all it did. Like, yeah, it had a massive gap up and it was due for a pullback. And you could look at the history and you could say, okay, it recently had a gap up at 224 and it was bearish and it got crushed, right? But there's more to it than that. You want to focus on the best strategy, which has lately been this gap close reversal to fill the gap below strategy, meaning you wait for the gaps to fill. Right here, there was a gap to fill at 226. You wait for that to fill. Once it fills, if it breaks down, reacts as a resistance, looks bearish, starts to break down, then you buy the put options. So I'm waiting for that gap to fill at 226. That's what I'm waiting for. So I'm looking at the next day and I'm saying, wow, another massive gap up. You know, if we're going back to Wednesday, it had this gap up, and what did it do? It started to try to fill the gap below. That history was repeating itself. And then on Thursday, it has a massive gap up, gets to 225, and then again, it starts to go back down to fill that gap below. So I'm starting to become very bearish on V stock. It's just too overbought, too many gap ups are happening, and then this is the candlestick. When you see this candlestick, this is like a bearish wick at or towards a gap fill level, which is right here. There was a gap to fill and it's major resistance with big upside potential. See, same thing right here. This is another bearish candlestick. When V hits resistance and it fills a gap and it forms this bearish candlestick right here, that's when you swing trade puts. It's going to get crushed the next day. You see it red on the next day, you trade puts. Or you can get in the day before, swing trade puts, and then you can add at open at the previous closing price and it gets crushed, right? So I'm looking at this chart and I'm saying, you know, everything is aligned. So in terms of all the reasons why I'm bearish, why I want to short this stock, it's trading at key resistance. It had a massive gap up and overreaction. It's extremely overbought. It recently gapped up right here at 224, came crashing back down to low 200s. And I'm looking at the chart history. It's consistently filling gaps and having gap close reversals for the put side, for the short side. And I'm also saying that this just almost filled this gap at 226. And it formed a bearish candlestick. So I'm telling myself, and within the watch list I had explained, as you could visually see right here, this was posted on Friday at 6:50 a.m. in the pre-market. I had said that V, my favorite setup, along with SPY puts for today, $220.72 is the best resistance level for puts. A crack under 218, and this can sell off hard to 216, right? So SPY puts and V puts were my favorite setups. I also said right here, V at 1460, F forward at 1464 reacts as a resistance, expect to pull back to 14. The puts printed like crazy. So anyways, with that being said, I gave him the trading plan, and I recognized the bearish candlestick. I recognized all of the signs, all of the trend stacking, all the things that I just stacked for you guys to determine that this was going to crash. And now where do we enter? That's the question. Where do we enter, right? The best price to enter was at 226.09. The problem is it never got to 226.09. But what it did is it formed a bearish wick and it partially filled the gap. So if we see this bearish confirmation towards this best gap fill level, we're going to want to buy puts the next day. So, or you can also swing trade it. So where do we buy puts at the next day? What is the best price? I'm going to tell you. When you want to buy puts on the first red day right here, V is having the first red day prior to a double gap up, a massive run up, right? You want to wait for it to go back to the previous closing price. When the stock gaps down, there's going to be a gap to fill above, which is going to be that previous closing price. And you could see once V stock, you see how it gapped down, it shot back up in the morning. That's what you want. You want it to quickly shoot up in the morning to fill this gap. It goes from red to green. Then when it goes back red on the day and you see these bearish candlesticks forming, these lower highs forming, it's no longer going back above the previous closing price, it's forming lower highs, it's starting to break down this key support. That's when you buy the put options. You buy them right towards this previous closing price when it looks bearish, when it's struggling to break out, when it's forming the bearish candlesticks, and anything you want to add in terms of how you determine when a stock is going to pull back, whether that's the VWAP, whether that's the EMA, whatever indicator that it is that you're using. For me, my indicator is this gap close reversal. That's my key indicator for key entry. And then in terms of, okay, how do I determine what confirmation, what reaction am I looking for? All I'm looking for is the stock struggling to break out? Is it starting to break down? Is it reacting where it goes from green to red and then back to red? And then it forms lower highs, it forms bearish candlesticks. I'm keeping it very simple, trading the chart, trading the price action. You can think of my indicator as the previous closing price, as the gap close reversal strategy, right? And then all of the things that I stacked on top of that, such as, okay, it has a strong history of filling gaps and having reversals to fill the gap below, right? Gap, close reversal to fill the gap below. It recently gapped up right here and it came crashing back down to fill the gap below. History tends to repeat itself, right? Wow, we're towards some major resistance on the daily, right? I'm giving you all the reasons on why I was so interested in shorting this. Right here, it partially filled the gap, massive two double gaps up. It partially filled it and it formed a bearish wick on the candle. So if it has the first red day, I play the puts. Now, where do I play the puts? Like I said, when it rockets back up in the morning to the previous closing price. Once it hits the previous closing price, wait for it to go red. See right here, as soon as it goes green, it goes back to red. That's bearish. Wait for it to start to break down and it forms lower highs. See how it's failing to go to 221.20 and now it's putting in lower highs at 220.70 and it's starting to break down. When it breaks this support, it's gonna get flushed, right? More lower highs right here. So in terms of my entries, you can visually see it all makes sense in terms of what it is that I'm teaching and what it is that I'm telling you. It's all aligned. My entries are absolutely phenomenal. V puts at 160. This was alerted at 9:51 a.m. I bought these puts right here at 9:51 a.m. Why did I buy it right here? Because it had a gap close reversal. It started to break down. It formed lower highs. And then once I noticed that it was about to crack this wick, crack this support, do these new lower highs, I bought the puts. And then right here, this is when I got extremely confident in the setup because it was forming new lower highs. I alerted that I added heavy, and it's a high confidence setup, which is something I don't throw around loosely. Those trades typically only come around 2 to 3 times a week. 10:02 a.m., that was my entry to add heavy. Right here at 10:02 a.m., why did I add right here at 10:02 a.m.? Because it formed lower highs. It was turning this previous support right here into a resistance level. It kept forming lower highs. The highs are here, the lower highs are here, more lower highs here, more lower highs here. It's starting to break down, and there's a little gap to fill right here. If it goes under this little gap fill, it's going to get absolutely crushed. That's why I added there heavy at 10:02 a.m. right before it sold off massively, going from 220s where I added all the way down to 217s very, very quickly from when I added, right? And if you just take a look at the option chain, at the puts, they printed like crazy. They expired, so it's not going to show now. But these put options closed at like $8 on the day. I got in at $1.60. I was selling in the mid threes for 100% plus. And yeah, that was V. So in terms of exits and in terms of maximizing, how low can this realistically go? This is how you can determine that. Right here, it had a gap up at 224. And it crashed and closed weak at the lows, going to 215. So it dropped, if you do the math, it drops 9 points from the highs, right? And we're getting into highs, which was 220.50. We'll just round it to 220 to make it simpler. So realistically, it can go to 200, in like $11. It can go that low. It can go to 211, 212, 213. Right here, it got to a high of 221.80, and it dropped all the way to 213. So there you go. This is your history. Use this as your history and use this as your history. This is a perfect example right here. It gets to a high of 221 and it drops all the way to 213. So if you're aiming for a major win, you're using the history, you're saying, okay, this gap's up. The bottom, it likes to close weak at the lows. If you're playing for that, 213s could be the price target, right? Now, let's go over some micro price targets. So in terms of your big win price target history showed you it can drop to 213 from that key resistance level. And also, there was a gap to fill below. So here you go. Gap, close, reversal. It fills the gap. It has a reversal. This is part 2. There's now a gap to fill below at 214.11. So you see this? See how it's turning the previous low right here on the day with big upside into resistance, which is now the previous closing price. It fills the gap. It reacts as a resistance. It forms bearish candlesticks. It breaks down, goes green to red on the day. And then you see it starts to have a reversal and it comes crashing back down to fill this gap below. So it's a two-part strategy. So what I'm telling you is the best strategy is the two-part strategy. Gap close reversal, and then part 2 to fill the gap below. There was a gap to fill below at $214. Plus, the stock recently gapped up to a high of 221.80, and it sold off hard weak at the lows all the way to $213. Do you see how history is repeating itself? But it's even more bearish this time because it's gapping down. It's having the first red day and it rockets back up to fill the gap. Once you see that gap reacts as a resistance, that's when you buy the puts. I showed you how to enter, right? So in terms of exits, your big price target on a situation like this, and this was determined throughout the history of the chart. I showed you 2 examples where it went from 220s to 213s. There's a gap to fill below at 214.11. We know it can drop to like 213s. The big price target is $214.11 to play for this gap to fill below. That's when you want to get out and lock in profits because it can potentially have a little reversal, plus it has big upside potential, right? So 214s is your big price target. Now, what are your other price targets where you want to lock in some profits? Because you don't want to just aim for a big, massive win with full size, because you could be up 30%, you could be up 50%, you could be up 100%, and then the stock reverses against you and you give it all back, and then you potentially turn that big green trade you had into a red trade. You don't want to do that, right? So you want to have profit-taking zones on where you lock in profits. And that's what I'm going to show you how to do right now using the chart on VStock. So your big price target, meaning this is like the low of day, the lowest it can realistically go to, and I showed you how I determined this, was at $214. That's your big price target, right? I showed you how to enter. The entry was, it's having the first red day, it had a gap down, previous lows look to react as a resistance, look to react as the previous closing price for the gap close reversal. Once it's bearish, play for the gap to fill below, right? So what are our other price targets? Right here, this is a key price target. $216.60. I'm using the 5-minute chart right now. So I trade with the 1 minute and 5 minute. Why is this a key level to take profits? Because the stock went from 216.60 all the way green to 221. That's big upside potential. Now, if that cracks and reacts as a resistance, which it did right here, that's going to be big downside potential. Instead of having that big upside move, it's going to have that big downside move, right? That's how you determine big moves, big key levels. You see a stock bounce from 216 all the way to 220. Well, guess what? If this support level cracks and reacts as a resistance, starts to break down, instead of that big upside move, it's going to have the big downside move. That's how you determine big moves. The chart, the price action is going to show you if the big move is there. So if you want to win big, you have to enter a trade where you're trading at a key level where you can win big, right? And that's all determined throughout the daily chart, throughout the intraday chart. It's going to show you, right? So I'm showing you how to determine big trades. I showed you on the daily chart how it can be a big trade. And you can just trade those. You can just trade the setups at the key levels that offer big wins. Every chart is different. Some charts are just going to have small little bounces with very small wins. Avoid those. Trade the ones at the key levels. These are the rare setups. These are the ones that only come around a couple times a day. I mean, in terms of this gap close reversal strategy, fill the gap below, that comes around every single day. There's stocks filling gaps, having reversals, gaps to fill below, gaps to fill above. You can use it both ways. But I would suggest to just focus on the ones that have huge upside potential in your favor, that are at those key levels, that have those big moves, like V stock, right? So in terms of a key profit taking level, right here, $216.60. You're going to want to lock in some profits right there because it's big upside. It could potentially go back to your initial entry if it starts to reverse, right? So that is your key profit taking zone I just showed you. So if you want to aim for the bigger win is at 214. So right there, that's your 2 price targets. Normally I have 2 price targets. I'm trying to keep it at 2. Sometimes I have 3, but I would say you want to identify 2 to 3 key levels where you lock in profits. You have a small key level, you have a middle key level, which is in between a small win and a big win, and then your third level is the big win, right? So in this case scenario, this was mainly just 2 key levels. So right here, big support. If you want to make a third one, you could say right here as well, 217.50, right? So this is a zone. So profit taking zone right here, pre-market support, big upside. See how it likes to have that morning rip, then it sells off hard, right? And then if it cracks this, it goes back down to fill the gap below. So you lock in some profits like I did. You could visually see right here. I started locking in. I sold half to play it safe at 10:27 a.m., making an 80% win on the puts. So at 10:27 a.m., I sold right here, which was at 10:27 a.m. Why did I sell off right here? Because it was right towards that pre-market support on the 5-day chart with big upside potential. So I did want to play it safe and lock in some gains right here towards 10:27 a.m. Now, one thing to note was the market was extremely bearish, and one difference in terms of V was this time instead of gapping up, it gapped down, having the first red day, which is bearish. When stocks have these big moves and they have their first red day and they rip back up to the previous closing price and then they go back to red, have a gap close reversal, they tend to close weak at the lows. So that first red day strategy, and then you wait for it to rip back up to the previous closing price, then you buy the puts, right? That is key for it to really close weak at the lows, that first red day. So that's one thing to keep in mind. And then I locked in the rest of the profits for the bigger win at 10, where was it? Right here at 1142. So 1142 was right here as it was attempting to break out. It hit my max risk. I was telling myself, this did just break down below the lows right here and it tried to fill the gap, but I don't want to aim for too big of a win. So in terms of my max risk, I told myself my max risk was this low right here. If it reacts as a resistance, I'll continue to hold. If it starts to break out, I'm going to play it safe. And it was trying to break out, so I played it safe. And then it had a fake out. It happens. It had a fake out and then it sold off. It happens. But it hit my max pain in terms of how much I was willing to risk. If you wanted to risk more, like I showed you the zone. The zone was right here. The low right here and the pre-market support on the 5-day channel. So the zone in terms of max risk was 216.60 to 217.40. This is if you're playing for the big win. That's the zone. So if you want to play it super safe, towards the low of the zone, that's what I was doing. I was playing it super safe. You get out and lock in profits if it starts to go above. If you want to risk a little bit more for the bigger win, then you play this zone, 217.40. If I were to play the bigger zone of risk, which means I give back more profits if I'm wrong about the trade, I would have made a much bigger win. But in this case scenario, I decided to go with the lower end of the zone, right? So you just got to draw these zones. You got to think about this as like a box theory. This is a box. This box represents the low of day with big upside potential. That's the low of the box. And your 5-day support with big upside potential. That's the high of the box. If it goes above the high of this box, you do not want to be holding puts. It's going to have a major shift in reversal, right? So I played the low of the box, which is extremely hard to do for it to really break down at that level. And that's why I ended up locking in too soon, because I played it super safe. But you can see just the whole day, it was reacting towards the middle of this box as resistance. And if it does that, eventually it's going to snap, go down to fill that gap below at 214. And if it cracks 214, it goes even lower, right? I mean, this was one of those days where the stock market crashed and it really dragged a lot of these down to lower levels than they would normally even go to. So, in a sense, that is the basics to this strategy, right? So, just to quickly recap it, stock that gaps up, big downside potential, major resistance levels on the daily, and then we're determining, okay, when is this going to be the backside of the move? When is it going to be bearish? Well, right here, it gapped up. It topped out at $221, and then it sold off all the way to 213 from 222. Right here, it gapped up. It partially filled the gap. It got to a high of 225, partially filled this gap at 226.09. And then it started to sell off. You can see partial gap close reversal right here, sells off. Partial gap close reversal right here, sells off. So I'm looking at this bearish candlestick. I'm comparing it to this. I'm saying, wow, this looks extremely bearish. So if we have the first red day, keyword first red day, I'm going to play it for a gap close reversal, which means when it has the first red day, you wait for it to rip back up to the previous closing price, buy the puts. Once it goes from green to red, and it forms the lower highs, and then price target towards the pre-market lows towards the low of day, and then other price targets I showed you for the gap to fill below at 214. That is the best strategy. That is a put option example. You can also use it as a call option. You could trade it as a call option. You could do what I just showed you. If there's a gap to fill above on V, you can wait for this gap to fill below at 201.10, use it on the call side. You could trade this strategy both ways. I prefer more of the put side, but I'm telling you guys, you learn how to trade both ways, especially when you learn puts, you're going to absolutely love it. You got to learn put options in this market, guys. We're in a bear market. You got to learn how to play puts. Even if we're in a bull market, the put options are still going to work when they hit their major key resistance levels. You have to learn. Now is the time, especially, to learn how to short, to learn how to buy put options, right? So that's a strategy. It's a gap close reversal to fill the gap below. What are our major advantages to what I just taught you? And remember, it has to look like this, right? Each chart's going to look different. It has to look like this. You want big wins? You got to trade trend reversal strategies at big key levels, not in the middle, not in between support and resistance, at the top of the channel, at the lows of the channel, right? Not in between. You're not going to find much big moves there unless it's like a major key breakdown or a certain level. But anyways, that is the gap close reversal strategy to fill the gap below, right? Stock gaps down, rips back up, closes the gap, comes back down to fill the gap below. And there's other variables, right? You can find 1 million stocks that are having their first red day. You can find 14,000 stocks, whatever it is in the market. I think there's like 14,000 stocks in the market, something like that, right? You can find a lot of stocks that gap down, rip back up, go red on the day, gap close reversal, play for the gap to fill below. That's not exactly what it is that I'm telling you to do. I'm telling you to add on things. I'm also telling you, not just with that, but to stack things in your favor. Is it at a major resistance level in the daily chart? Is it filling a gap right here towards major resistance? Does it look extremely bearish? Is there proven history levels where it rapidly sells off from that resistance level, right? This chart that I'm showing you is gold. So now we have to find more charts that look like this, set the price alerts, and forget about it, right? So I'm gonna set some price alerts right now with you. I'm gonna set a price alert right here on V stock at 235, right? Once that triggers, we got the best trading opportunity. I'm gonna set a price alert right here. We'll see if it can come back and fill this gap within time. Once that triggers, we got the best alerts in the game. I'm going to set a price alert right here, key support, big upside for the call side. So there we go. And you just keep on doing that every single day. When you see massive gap ups, massive gap downs, trade these both ways. That's the game plan. That's the strategy. So yeah, that is going to wrap up this lesson. In terms of the best setup that I'm seeing right now, and I'm going to post more, it's going to be V. V is going to be the best setup. V stock right here is excuse me, not VF. It's not FB. Oh, and big shout out to those of you who played forward puts printed from the watch list as well. I saw the 14.5 strike contracts go from 2 cents at the top all the way to 40 cents at the bottom. Absolutely crazy. Once you notice that forward reacts is 1462 resistance right here, or even the top of the channel, you can visually see we had so much resistance on forward at 15s. Once that reacts as a resistance, or once it goes red and turns that into resistance like it did right here and start breaking down, you play the puts, ride it back down to fill that gap below in the daily that I showed you at 14.12 in last video. So on Facebook, keep an eye on Facebook. Facebook recently had a massive gap up. This is just like V. There was a gap to fill above at 217.31. It got to a high of 212.50, so it partially filled the gap. Remember, the best ones are when the gap fills above, right? But this candle is bearish. So this had a massive gap up, and then it gapped up again, partially filled the gap, formed a bearish candlestick on the daily. Now it's just floating, looking extremely bearish, and there's a gap to fill below. So what I'm telling you is we're at this keyhole round number as well at $200. So what I'm telling you is if Facebook is red on Monday for the first red day, buy the puts. Buy Facebook puts when it has the first red day. What's the best entry? Just like V, the previous closing price. That is the best entry. $200 and 47 cents. Another great entry as well is $204 to $203, right? But $200.47. You see that breakdown, you see that react as a resistance if it gaps down, has the first red day. Buy the puts, ride it back down. Here's the target right here. Well, where's your target? If you're buying puts right here, where's your target? Well, if it cracks 199, it's going to go to 193 to 195. So 193 is what I would aim for. I would aim for 193 to 195. Those are your profit taking zones. If it cracks 193, then it will drop to about 190 and attempts to fill this gap, right? So keep an eye on that. That's going to be the top setup. So if you do want to join Trader Society, that is going to be the private team, the first link in the description. That's all you got to do. Click that button, the first link in the description. Read everything on the page. Watch the short video. It's going to explain to you what is included in the program and if this program is right for you, right? So that's the first link down below in the description if you want to check it out. As soon as you join, you get lifetime instant access. It's a one-time fee program. Eventually, this is going to be a lot more expensive. We have members join this program before they even join. They make back the cost of the program. We have members who've been in this program for like a month. They're making like 10x, 20x the cost of the program. Like prices have to go up. Like it's too good and it's way too underpriced right now, right? So it is priced at an extremely affordable price right now, and it is worth 10 times the cost of what it's priced now easily. I can easily sell this for 10 times the cost of what it's right now. So if you do want to join, it is the first link in the description. You get lifetime access. Some of the things you get lifetime access to, everything on that first page, but the video lesson library. The video lesson library, you will learn how to trade both ways. You will learn how to trade puts and calls. You will learn how to buy and sell both ways to short, right? You will learn how to trade stocks, trade price action both ways using the unique gap method trading strategies that I've created. You will also learn risk management, position sizing, psychology, and mindset training within the video lesson library, right? So you get the video lesson library, and then you also get the chat room. Within the chat room, you get my real-time trade alerts, my entries and exits. You get the stock watch list, the stock analysis that's going to prepare you to trade the best setups at the best prices and give you the price alerts, write everything out with the key levels. You also get access to Gear War. He is a phenomenal options trader who's mastered the SPY. He trades it both ways, and he is starting a 1K to 100K challenge very, very soon. So you will get access to that as well. You can also add us as a friend on Discord and send us one-on-one direct messages. You do also get access to, and this is one of the most valuable things, the live trading session that I do every single day at Market Open. You get to watch me trade live at Market Open every single day, see my charts, hear the price action, hear the commentary, and see my portfolio, right? That is every single day, Monday through Friday, right? And there's a lot more to it. If you want to check it out, then it's going to be the first link in the description. I'm telling you guys, this program will prepare you to trade the best setups at the best prices. Once the market opens, it is going to show you how to trade the best setups at the best prices, right? So that's two things. You get the preparation, and then you get the live trading footage where you get to actually see it be done. And then you get the recap. That's a 3-step process. How to find, how to trade the best setups, how to prepare, how to plan the trade, where to set the price alerts. Step 2, the price alert triggers. The market's open. We're trading live now. We got to see how it reacts. We got to wait for the confirmation. If it reacts the way we want it to, if we get the confirmation we're looking for, then we enter the trade. And then from there, we follow the plan. We follow the supply and demand zones, the key profit-taking zones, right? We manage our risk. We exit our trade. Then from there, we recap the trade. What could we have done better? What did we do right? And then we repeat that process every single day. If you want to learn how to trade the best setups at the best price, then sign up for Trader Society. This program is capable of changing your life, because not only has it changed my life, but it's changed members' lives within Trader Society. It is possible. So I'm gonna leave the opportunity down there for you. Like I said, as time goes on, we will be raising the prices. Right now, this is considered a low ticket offer. Eventually, this will be a high ticket offer. And I'm telling you, if you wanna get in now, is the best time. The market volatility, this is the lowest it'll ever be priced at. And like I said, as time goes on, it's going to be a high ticket product. It will be a lot more expensive. I'm going to close up the program, just work with members in the program. And when I reopen it up, when that does occur, we are going to raise the prices exponentially, because we want to keep this group a quality over quantity group, right? So now would be the best time to get in, and you will be grandfathered in for life, lifetime access, instant access at this price now. I will see you guys tomorrow. I will see you guys Monday at Market Open, and I'll be posting a video with more setups to trade on Sunday night. So I will see you guys till then.